Yeah, it seems like the picture when it comes to consumption still looks to be quite weak in China. But yeah, we're coming up after a week's break from Golden Week. What are we expected out of markets tomorrow, you think?
Well, happy to be here. I think the interesting question to watch next week is actually southbound flows from China into Hong Kong. As you mentioned, stocks are low. You've had this, China market closed for a week. There's these deals in the property space potentially. And so I think watching the southbound flows into Hong Kong from the mainland will be key to watch to see if there's some interest in buying up some of these depressed stocks.
Do you think they should have interest in buying up some of these stocks? What's your outlook for Hong Kong equities up until the end of this year?
Well, again, we take a longer term horizon than that. Clearly, there's a valuation opportunity in Hong Kong stocks and China stocks in general, and they're trading at big discounts to global stocks, and also the Hong Kong stocks are trading cheap relative to the mainland stocks at the moment. So clearly, I think there's a short-term opportunity here to snap up some of these stocks and see if there's a relief rally in Chinese equities in the second half of, or kind of the next 2 quarters, especially if the PBOC begins to ease policy in response to slowing growth, given the property slowdown.
So those are some potential catalysts, but is there any kind of reason to think that any kind of rally we're going to see, some dip buying that we're going to see is long lasting if we still don't really get much clarity or resolution on Evergrande and we continue to see fallout across the sector when it comes to companies like Fantasia?
Yeah, I think in the near term, again, the property saga is going to continue. The Chinese authorities seem to have a much higher pain threshold in the past, and so we should be, expecting some slower growth and, this to drag out for a bit. But I think the key turning point is going to be when credit is eased, especially when credit is eased to the property development sector. I think that's going to be a big sign, and that can actually help propel Chinese and Hong Kong equities higher, especially given the fact that if China is starting to ease because of slowing growth, whereas the Fed is starting to tighten because of inflation concerns, you can have Chinese equities decouple from the rest of global equities. And I think that's a key thing for us to watch.
Now, speaking of value, because this dovetails into what Yvonne was talking about, into your earlier point, there is a value opportunity here. While the consensus around Evergrande still seems to be that any final fallout will be limited, I guess to use a black hole analogy, that event horizon seems to be expanding little by little still. Is it too early to call value on Chinese property, whether that's equities or credit?
Well, I think, the market is already starting to distinguish between the weak hands and the strong hands. I think, look, we have to understand when we talk about systemic risk. So the Chinese authorities have a clear view on the hierarchy of who needs to get paid. So first and foremost, the home buyers and the suppliers of these developers need to get paid. Then there's going to be the Chinese banks. And then at the bottom of the list are going to be the offshore bondholders. The offshore debt is subordinate to the onshore debt. And so the question for the offshore debt is it trading at distressed enough prices to match the eventual recoveries? And so the systemic risk in China is low because actually the banking sector has been reducing its exposure to China property developers for quite some time. That's why developers account for 40% of the high yield offshore market, because they haven't been able to borrow onshore. And so from a systemic risk perspective in China, it's manageable. And in fact, most property developers have not crossed the 3 red lines. And so the government can ease, kind of give the banks more direction to lend to these companies if need be. The risk is going to be borne by the offshore bondholders. And that's where we need to kind of watch things closely, especially Fantasia. Fantasia had the money to pay off that bond. There was no liquidity, right, at least known liquidity risk. They chose not to pay that bond. And that's what we need to watch. And that's why we think there's going to be more stress in the offshore market. But fundamentally, the stress in the offshore market will not feed back onto the onshore credit markets. And so that's why we can say, look, the systemic risk in China is contained. It doesn't mean there won't be pain felt by offshore bondholders. What's interesting to us, though, is as the bonds begin to price this in and bonds start trading at 20 cents on the dollar, there are going to be opportunities for investors in Asia high yield broadly, which is already yielding 8.5%, if not higher, vis-a-vis US high yield yielding 4%. And so again, for credit hedge funds, for distressed investment specialists, this is going to be interesting. There's going to be some money to be made, but it may be too soon for kind of long-only investors to get involved here.
Right. I was going to ask you, you say that Asia high yield is looking quite interesting right now. How far down the spectrum do you look then for any value right now?
Again, I think you have to look at which bonds are secured, which ones are unsecured, which developers actually have the liquidity, and then yes, which ones want to pay vis-a-vis can pay. And so that's why the Fantasia incident is a little disconcerting. We have to watch that closely, how many other developers want to pay, can pay, want to pay. With Fantasia, though, again, the current thinking is they didn't pay the offshore bondholders to make sure they could pay the onshore debt holders, the private debt holders. And again, that's the clear hierarchy here, and the developers are going to have to manage their onshore liabilities before they manage the offshore liabilities.
Okay, and final question, I guess, to your point here, because I mean there is substantial yield to be on the table. 4% high yield U.S., around 10%. I just checked. 10% Asia high yield, China high yield 16%. 10%. Do you think that covers the risk people are taking on Asia high yield?
So, I mean, generally speaking, a rule of thumb is when something is yielding 1,000 basis points of spread, that's a good time to buy high yield. I do think that, again, some of the juicy yield for Asia high yield is the very high yields in China property. So when we look at Asia high yield ex-China, the yields are closer to, say, 5 or 6%, which is still attractive, I think, relative to U.S. high yield. But again, I think this is a space where the credit specialists need to come in and really separate the good credits from the bad. But yes, clearly there's money to be made in Asia high yield right now.